As gold's rally is playing out in real time, some would make the argument that we're in a bubble and that it is about to burst and gold's price is going to come crashing down. Now, there are scenarios where that could happen, but I think there's something much bigger that is happening right now. I'm going to explain what that is as we explore. We have enjoyed $4,000 gold and plus for quite a while now. Many would probably make a cogent argument that we're likely not going to see below $4,000 gold again. And that very well could be the case, especially with what we've been seeing happening since 2022. You know, I can look at the gold rally as something that is what we have seen before and in the past with regards to gold's price reaching record highs, and this is just another one of those times. But I think when you look through the course of history and understand what gold has done for thousands of years, you begin to sort of shift your paradigm in terms of what your feelings are about gold as a commodity and in all reality as a monetary metal. It is treasured, and this is why we should come to an understanding and shift and have this paradigm shift of thinking in terms of gold. And it's been discussed before, but this time it's a little bit different on how we need to perceive things because we are starting to see some big changes, and gold's price is a reflection of that change in a very positive way. My friends at Summit Metals, they know this all too well. They themselves believe in gold so much that they buy it themselves. They hold it in themselves and have an understanding of the markets that far extends beyond the life of the company that they represent. So check them out. Experience their great customer service for yourself by clicking on the link in the description below. So we know that gold's price is up well over 60% this year, its strongest gain in nearly 50 years. And so we need to know what's happening here. Is this really a bubble? Or is it something else that's happening? Maybe some sort of a structural repricing. In other words, a revaluation. Now, when you think of revaluation, people are thinking about central banks or nations revaluing their gold. And it has happened in the past. And of course, it's long overdue to happen here in the United States as we have it officially on our books at $42.222222 per troy ounce. But inflation-adjusted gold is at its most expensive ever. But the speculative mania is absent as to what's going on there. Think about it. When adjusted for inflation, gold has far surpassed its record high before. That was about $3,600 an ounce. And boy, many of us think that $3,600 gold would be a steal at this point in time. But historically, gold has moved inversely with real yields. And since 2022, gold has risen despite rising real yields and falling inflation, which is a major break from the past behavior. And of course, we know what the catalyst behind this is, and this is the seizure of Russia's FX reserves have shook confidence in dollar-denominated assets. And of course, in 2022, we saw peak inflation, 9.1%, and it has since come down since, but nonetheless, those are the two things that has pushed gold's prices up, and the confidence in the dollar has waned a bit, especially from nations not friendly to the United States. The central banks began buying gold sort of as a sanction-proof, politically neutral move, and official gold reserves have exceeded 1,000 tons annually for 3 consecutive years. That's a big deal. We're seeing more gold accumulated now than since 1967. So this is why, in a sense, this is not a bubble, because ETF holdings are still about 10% below their 2020 highs. In other words, exchange-traded funds holding up and holding gold. Gold miner ETF shares have shrunk by a third. Wall Street is skeptical, forecasting future gold prices well below spot, and speculators are preoccupied with crypto and AI assets instead of metals. So it's climbing for institutional reasons, not because of the natural market or the market forces, at least to a large extent. That is what has buoyed up gold's price. That's why it's not as why when we see dips in gold's price is not nearly as much as you would see for like silver or any other commodity and asset class. Gold is just radically different in that way. And in all actuality, in reality, that has been the case for a long time. It's just been amplified now since 2022. And so the U.S. has shifted from creditor to the largest global debtor. And we've seen the rising debt in the United States for many, many years. But now the U.S. federal debt, even though it's a very large number, almost $38.5 trillion, but it has jumped from 30% to 120% of GDP. Those are wartime numbers, folks. That's right, wartime numbers for the debt to GDP ratio. And we're not in a war. And we have fiscal deficits that are averaging about 6% of GDP. These are not good figures, and it doesn't give us much confidence in the dollar domestically, but also around the world. Of course, the whole world is in debt. So the dollar, I think, it has more room to fall, and if it's not going to just crash and burn, tomorrow, because of the full faith and credit of the United States, which is declining. And with Moody's and there's other organizations that have lowered our credit rating a bit. That's just another nail in the coffin, I think, to an extent, to a dying dollar. The dollar is dying. It's just dying a very, very slow death. But it's starting to be noticed now, especially with the U.S. federal debt rising, deficit spending, and Fed policy rates are falling, and that is not rising into double digits. And the policy and the rates falling and the interest rates falling is another sign that gold is going to continue to go up in terms of price, which usually happens. But this time I think it's going to be even more effective to bolster up that high price well above $4,000 an ounce. And so what are we looking at here? Well, essentially, this is a monetary regime shift. And that monetary regime shift means that it's shifting, according here to Eamon Sheridan, is that it's shifting away from the dollar-denominated assets to gold-denominated assets. That's right, gold being a Tier 1 asset as delegated by the Central Bank of Central Bankers, the Bank of International Settlements, back in April of 2019. Now we're seeing gold really show itself in terms of its price. And hindsight is 2020, but I feel glad that I'm still buying gold and feel fairly confident that it's going to hold its price as well as hold its value. Private investors, though, outside of some of us here and many in the East, but most in the Western world, they hold very little gold. Now, if they were to begin reallocating, even modestly into gold, we could see a second much higher leg increase. And in fact, I think as the word gets out and there's more talk about gold, especially with what's going on around the world, I think that we may see more buyers of gold. And you can get into gold as little as a gram or even less than that. In fact, Summit Metals, the channel sponsor, has these cool wallets, and you can get these cool Scottsdale 1 gram bars and fill it up. It's really, really a cool way, much less expensive way to be able to accumulate gold. So I think that is one way, and I've been buying more fractional gold this year precisely because the price is so high. But so that could be something we see, especially if more people buy gold, and more people are waking up to it. Even silver stackers who have been so hardcore on silver and ignored gold, some of them are starting to also look into gold too, because it is much more stable store of wealth, and it can hold a whole lot of value in a very small size. This thing here, this coin right here, represents about 72 ounces of silver as of the recording of this video. So that gives you a little bit of perspective as to how important and how much value you can add with gold. Now, bonds no longer hedge equities reliably, and gold has become the only consistent risk-off asset in recent turbulence. And I think that's only bolstered by the case that the Bank of International Settlements made in April of 2019 for gold. But There's more to it than just what central banks say. There's more to it than just what the markets do or debt or anything like that. It's history. History is our strongest guide. That provides the intrinsic nature of what gold is, and there's value attached to that precisely because of its historic value. And I think is the biggest reason why we as individuals should be our own central bank by holding gold in our possession. Even as little as a couple of grams, you have empowered yourself to have wealth outside of the system. And we're starting to already see fights in that direction. I'm going to be talking about that in another video coming up very, very soon. But gold really is a part of the monetary revolution, the precious metals revolution that I talk about or have been talking about for a long time here with what states have begun to do. States are moving in the direction, save for one or a few others, to actually take away taxation and to actually see gold and silver as legal tender, as money, which is a big middle finger to the Federal Reserve System, because Article 1, Section 10 of the Constitution still stands indeed as the stalwart for what is indeed sound money for the United States of America. But it doesn't just mean that we need the Constitution to tell us that. It's just natural law has told us that throughout the ages, civilizations, throughout history. And I think that is remarkable. As gold and silver have been mentioned over 400 times in the Bible, to me, that's enough. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.